Hello and good evening. Welcome to the October Masterclass for Housing Joint Venture. Really excited. Looks like we got some great folks saying hello in the chat. Hello, Cynthia. Hello, Shay. Thanks for saying hello to everyone. My name is Rochelle Delia, and I am your host for this evening. If this is your first time joining us for a Housing Joint Venture Masterclass, welcome. Hopefully, this will be an absolute pleasure and very grateful for you joining us today. We do try to make these as interactive as possible. And so if you have any questions or any items that you'd like me to comment on, feel free to put those in the Q&A section. We do accept questions at the end and would be happy to have comments or questions then. I also do try to monitor the chat as much as possible. But if you put in the Q&A, I guarantee that I'll be able to see it and answer your questions. Now, today's webinar is going to be an absolute treat. As you may have seen either via the emails or on social media, we are coming up on the fourth quarter of the year. And that is what we like to call around these parts buying season. And buying season is essentially the time of the year where you can find the absolute best properties for sale for investment purposes. And so that's what we're going to be discussing this evening, and certainly looking forward to having a great conversation with everyone. So I just want to respect everyone's time and certainly thank you all for being right on time at the top of the hour for today's masterclass. And again, if you have any questions throughout the webinar that you'd like us to answer at the end, be certainly happy to do so, and maybe even be able to incorporate those throughout the presentation as well. But put those in the Q&A. I did try to monitor both the Q&A and the chat as well. But again, today's webinar is going to be a great one. And we're really going to cover a lot of details that both a prudent existing real estate investors as well as investors to be what they need to know. And specifically, we're going to talk about how you can properly prepare for the buying wave that's going to happen. We're also going to talk about the easiest yet totally hidden in plain sight location for finding motivated sellers. And so that is at the very end. So that is a very special bonus that I'll be sharing at the very end for those who stay to the end. We're also going to talk about this upcoming economic environment. I mean, we are still in the pandemic. We don't know if we're still at the beginning, middle, or end, but really, what does that mean for the economic environment, and how will that affect real estate as we know it? And why, if you don't already have investment properties in your portfolio, why you absolutely need them, and certainly also why this timing could quite possibly be one of the last times that some people will be able to, quote, get into real estate. So very, very excited for the conversation this evening. And again, thank you so much for attending this month's masterclass. Now, if you are not familiar with the Housing Joint Venture family, we have been in and around real estate investment, and real estate education for quite a number of years now. On the top of the screen, you'll see our CEO, John Delia, and our work has been featured in the Huffington Post, in BBC, Modest Money, Investing.com, Do.com, as well as Columbus Underground. We even previously had a TV show on the network Bounce TV, and published a book in 2017 called Life, Liberty, and Property, which is a guide to successful real estate investing. And you can find that on Amazon. We also give certainly a lot of lectures at universities, from University of Texas at Austin to Notre Dame to Career University in Seoul to Bellevue College and many others. And so we really like to influence not just real estate investing for investors today, but also really about the ethos of real estate investing and development going forward, and really what that looks like as we go and try to shape our communities, and really what our overall economic environment and climate looks like for housing affordability, and financial empowerment going forward. So again, thank you so very much. And I'll also introduce myself. My name is Dr. Rochelle Delia, and I'm the Chief Education Officer here at Housing Joint Venture. We are both a real estate development firm, meaning that we do real estate development, as in take ugly houses, make them pretty. We do ground up development and work with existing landowners to bring their visions into reality, as well as help new investors and investors that want to grow their portfolios and help them scale. We offer educational services like this. And I absolutely love these monthly master classes because it gives us a way to really communicate and make sure that we are offering the services that you investors need to really position yourself to thrive in the coming environment. So I'll be telling you a little bit more about how you can work with Housing JV at the end. But with that, again, welcome. Thank you so much for joining us. And again, these are interactive, so feel free to say hello in the chat. Let us know where you're coming in from. We have some Connecticut, we have some Jersey. I'm calling in here from Ohio. So feel free to say hello. And again, if you have any questions or just want additional comments on anything that we discussed this evening, feel free to put them in the Q&A section. And that way I'll be sure not to miss it at all. Okay. So as we get going this evening, there really is an updated case for real estate investing with work, with daily life, with expenses. It's really easy to feel financially behind, especially in a changing environment like we're facing right now. And that's even for high earning professionals, folks that earn over six figures a year. You can still feel like you're not making that marked financial progress month over month, and it doesn't feel good. And I'm here to tell you that you're not alone. And the solution to this really is to make money moves that propel you forward by design, almost by default. And if there's one asset class that is treated differently from all the others, and I like to call it essentially the teacher's pet of the IRS, and really giving those who take advantage of it direct access to the financial fast track, that is real estate investing. And just to level the playing field here before we get started too far down any rabbit holes, I just want to make sure that we're all speaking the same language. So when we talk about investment property, we're talking about real estate that is intended to produce income. So this is separate from what your primary residence would be. This is separate from a vacation property that your family may use from time to time. This is really real estate that is offered in service to others. And it is really a combination of both an investment as well as a business. Okay. And so when we talk about getting on the financial fast track, it's really about, again, making sure that you feel like you're making that marked financial progress each and every month. And you want to make sure that not only that you're making excellent income, but that your money is working for you. Because, we all know that it's very possible to earn a healthy salary, but feel like you're financially behind. If you've ever felt like that before, feel free to let me know in the chat. And, I think there's a conversation that is missing from the national dialogue about what it means to be rich versus financially independent versus wealthy. When we think about people that are rich, those are folks that earn a high income. It can be an attorney. Personally, my background is as an engineer and a scientist. And, it's excellent to be a high earner. But the problem with that is when your effort stops, then the income stops. Cynthia knows what I'm feeling, right? So you can earn a lot, but if you don't feel like you're actually making progress, it doesn't really matter, especially if you live in some of these high cost of living areas like on the East Coast, and that doesn't feel so good. Now, that's the conversation about being rich. It's like I earn a high salary, but when I stop working, the money stops flowing. And that's not so bueno. Now, being financially independent, that is where when you earn more than your expenses and when your income is not tied to your personal efforts. So I think a big misnomer is this concept that being financially independent may be the same thing as living a super lavish lifestyle, like maybe the celebrities may live. But that's not necessarily the case. Being financially independent simply means that you no longer have to go out and work for someone else in order to cover your monthly or daily living expenses. And a lot of times it's a combination of lowering your personal expenses as well as generating income, having assets that produce income. And those can be businesses, properties, so forth and so on. And so, the concept of being rich versus financially independent, I think in the national dialogue, it's really they're used interchangeably, but they really are different. And of course, being wealthy, that is where your rate of hourly income, it increases steadily, almost on its own, without you having to put more effort into it. And I love listening to Albert Einstein and his discussion of compound interest as one of the eighth wonder of the world, and that it automatically, your money compounds upon itself, and it basically has a snowball effect where people can't catch up because you've been putting in the work and putting in the effort diligently over time. And so the money that you've invested, it builds upon itself, builds upon itself, and builds upon itself. And so, of course, with all of these, I do want to iterate that, there's no free lunch, regardless of what it is that we do. And all of these require an upfront effort. And so just so we're all on the same page here, we're not selling any false dreams here. There is certainly effort required, particularly in the beginning. And, people tend to go from what I'll call rich to financially independent to wealthy, kind of along that spectrum. Not that you can't skip some stages, but that's typically how it goes. And at the financially independent stage, that's really where you're using your money to purchase more money and more freedom until it compounds, until you build true true wealth. Okay. And again, what we really want here is to have income that's not based on our personal effort. And this is how you become in this wealthy realm. And, there's a wonderful quote from Warren Buffett that I love to mention. And basically, he says, if you don't learn how to earn without working, then you'll end up working until you die. And none of us want to do that. None of us want to do that at all. Like if you don't put more time, then you can't earn more money. And that really doesn't feel good. The reason why we're all here is that with income producing real estate, it allows you to earn without putting in more time. It allows you to put in that first initial investment, and the property continues to perform month after month, year after year, without you having to add more personal time or personal effort. Okay. Now, I do want to add a caveat that real estate investing does require active management. So the concept of passive income, that is a tax designation. That is certainly a tax designation and not necessarily indicative of how much work is involved, but it certainly is wonderful and powerful, and just how much effort you don't have to put in and how much you're able to reap over time. So very, very happy to chat about that today. And I think a lot of people like real estate investing because, hey, it's an investment that can grow in value over time, kind of like dividend paying stocks, So the stock pays a dividend in regular intervals throughout the year. And at the same time, that stock itself can appreciate over time. Investment property owners also get two-sided benefits. You get income today, as well as the potential to sell the property at an increased price later, which is amazing. Now, overall, I will say that one of the primary benefits when it comes to real estate investing is the tax advantages. So I'm just going to cut to the chase and say, that for most folks, the tax advantages and the ability to reduce your taxable income, those are numbers 1 through 3 why people would invest in this type of asset class. Now, there are 3 different types of income: earned, passive, and portfolio income. Now, earned income is what we've talked about before. That's where your income, the income that you earn, it's similar to what you would earn from working a full-time job or similar to running a business, right? So that is income that you earn, again, from your personal effort. Versus passive income, those are income that you earn, again, that are not tied to your personal efforts. So things like rent, royalties, any stakes you have in limited partnerships, things like that. Now, what really makes this asset class in times like this so powerful, and I'm going to talk a lot about what's going on today in our economic environment, but one thing that I do want to take a moment to highlight is something called depreciation and amortization. So depreciation basically means that the property will deteriorate over time from a tax perspective, and so from a financial perspective, the IRS assumes that the property becomes less and less valuable over time, and therefore you can reduce that from your taxes just by being an owner. So they assume that the building will only last 27 and a half years, and every year you can deduct 127 and a half of the value of the property. So we all know that buildings last way longer than 27 and a half years, but this is essentially the government giving property owners a benefit or a thank you for investing in the infrastructure of our communities. And that is exactly what we want to talk about today, how we can invest in the infrastructure of our communities and why the fourth quarter of the year is the best time to do so, not only from a tax perspective, but from an acquisition standpoint and this economic climate that is so unique that it is really, really unprecedented. So we talked a lot about how property values can increase over time, and that really is one of the advantages. The concept that I can purchase something, I can gain value from it, and then I can sell it for even more than I paid for it while having benefited it in the meantime, that's absolutely impeccable. That's absolutely impeccable. And there are very few asset classes that allow you to do that, and real estate is certainly one of them. And again, we talked about the tax benefits as well. So just to sum up this section very briefly, if you don't find a way to make money while you sleep, then you will work until you die. And that's not, we don't want to be in that. We certainly want to be in the other realm of folks that where our money works for us, especially while we sleep. Okay. And so when we talk about buying season, everybody knows people that quote unquote used to be in real estate. We hear about all these crazy landlord stories and people getting taken advantage of, but ultimately real estate is a proven asset class and it ultimately works. And you might be thinking, okay, I agree with this concept of real estate being on the financial fast track, but I'm just not really sure that right now is the right time to focus on real estate in my portfolio. And so I'd really like to hear from everybody. I have a quick poll. And so just let me know, like, how are you feeling about real estate investing right now? So just respond to the poll really quickly and let me know what you're thinking. Are you still in the research phase? Are you still like, I think real estate is for me, but I'm a little hesitant if I can financially swing it. Or I think real estate investing is for me, but I'm just not sure if now is the right time. Or maybe you're eager to jump in, or maybe you're already an investor and ready to grow your portfolio even more. So go ahead and let me know in the poll what it is that you're thinking. All right. Hi, Chris. Good to see you on tonight. All right. So we're half and half here. So I'm seeing some folks are a little bit financially hesitant and seeing some people that are eager to grow their portfolio. Excellent, excellent, excellent. So hopefully we'll be able to chat about both of those. And Shay says that she has a little bit of mixed feelings and she wants to invest in various types. Okay, awesome. So hopefully our conversation tonight will address all of those. So, what we're going to talk about is what's going on in our world and what makes this year particularly unique when it comes to purchasing and expanding your portfolio. So, just to level set, buying season is typically the fourth quarter of every year, and it extends into the early first quarter of the year as well. So, typically, this extends from around Thanksgiving to Valentine's Day. And the reason why we like to call this buying season is that this is the time where I'll call it persnickety investors can really purchase properties at a discount so that their return on investment is so much greater than they can get the rest of the year. Now, this doesn't mean that you can't purchase properties the rest of the year. That's not at all what we're saying. But what I am saying is if you have the mental capacity to purchase at this time of year, then more often than not, you'll be able to purchase properties at discounted prices, much more so than you will in other times of the year. Now, why is that? Of course, this is the holiday season. Most people are focused on their families at this time of the year. And when they think about real estate, they say, oh, I'll wait to move till the springtime, or I'll wait to sell the house in the springtime, things like that, after the holidays are complete. So the same reason why you would not necessarily want to advertise for someone to occupy your rental property this time of year is exactly why you would want to buy this time of year. Someone who's going to move in the holiday season probably won't be as family oriented and may not be the best person from a rental standpoint for that longevity and consistency that you want from an income standpoint. However, from someone who is selling property this time of year, they're going to typically be more motivated because when they're trying to get liquidity for holiday gifts or travel or medical reasons or whatever, if someone is trying to sell at that time of year, they really want to sell. And you lay that onto the fact that there tend to be fewer buyers at this time of year. Again, not that people are distracted, but people are focused on their families. And so when people are looking at their families this time of year, you really have this culmination of motivated sellers and fewer buyers that really make it an opportune time to purchase more properties. Okay. And so when we think about this, buying season happens every single year. But what is it particularly about 2021 that presents us an unprecedented opportunity? Let's get into that. So first, I think it goes without mentioning that we are still in this coronavirus pandemic. They call it COVID-19 and then COVID 2020. And now we're in COVID 2021 and it looks like we're going to be hanging out with it in 2022 as well. And so with that, we don't know when the pandemic will be over, but a few things have certainly become clear as a result of this. First is that housing has become more valuable now that people are spending more time at home. Social distancing is becoming more common, and we can probably say that remote work, or at least a hybrid work environment, is here to stay. So that means that the place in which you dwell or where you live, it used to be this kind of transient thing. I'm a millennial, and I certainly have a lot of friends who thought they would never purchase a home. They didn't see a reason for it. It was more of a liability than an asset in their opinion because they wanted to have the flexibility, to kind of up and leave whenever they wanted. But when you come to face with a pandemic, then the idea of having a place where you can call home, a place that feels like a sanctuary or gives you some sort of reprieve, now the whole conversation and mindset around housing has shifted. And persons who typically were not in a buyer pool have moved into a buyer pool. Folks that would want a smaller space just for money saving purposes have decided, maybe I will go out into the suburbs and get a larger piece of property, or rent a larger space so that I can be more comfortable. So those creature comforts have taken a larger priority than they had in previous years. Next, we have mortgage defaults, and they're going to start hitting the system. So this is my first time living through a pandemic, as it is all of ours. And a lot of homeowners were certainly hurt by COVID-19, job restrictions, layoffs, and the like. And so some homeowners were able to delay their mortgage payments, but very similar to 2018 to 2008, a delay in mortgage payment is not a moratorium on mortgage payments. And so there was not a lot of transparency around the overall cost and what that really meant to their mortgage payments going forward, where they just extended and tacked onto the back end, or where they're going to be basically re-amortized over time. So now their monthly mortgage payments have increased. So that lack of transparency really caused some upsets in the market. And so typically it takes about 12 to 18 months before mortgage defaults start hitting the market as foreclosures. And we're right about 18 months into this pandemic. So looking forward in the next 6 months or so, that's when I expect us to start seeing some of those early foreclosures, assuming the banks will allow them to actually come forward and hit the market and not hold them as shadow inventory. But assuming everything is balanced, I think we will start seeing some of those mortgage defaulted properties start coming on the market soon. So again, that's just another opportunity to purchase properties at a discounted rate, which is great. Now, here comes the bad news. The bad news is that instead of only looking at just mortgage defaults, we also have, from a construction standpoint, we have builders, we have construction trades, and all those are facing shortages in materials as well as labor. And so when we talk about supply chain and roadblocks, COVID-19 is really hampering a lot of what contractors are able to do and what they're able to have in terms of throughput. So this is an article that actually came out in mid-September, and it's talking about general contractors, and 89% of contractors are having difficulty finding craft workers, i.e. specialized skilled workers. So think of people like framers, roofers, people that are not just general laborers, but they actually are the skills tradesmen. So as we have fewer and fewer skilled tradesmen, that means that we're going to have to pay those laborers more from a labor standpoint. And oh, by the way, fewer people are actually wanting to work. People are quitting their jobs and not actually wanting to participate in the labor market. So that means that that's going to all trickle down to increases in how much it costs to have renovations completed, new build construction, so forth and so on. Okay. And the last one that I want to mention in this area is the actual materials cost, as well as inflation. So from a materials standpoint, if you have not been watching, there have been a lot of price increases that have happened in building materials more broadly. And I think it has been most exacerbated in lumber and plywood prices. So just to give a little bit of context, what people would call a stud or a 2x4, you used to could buy that for about $1.50 to $2. Now today, and that's pre-pandemic. Now in the pandemic, each stud is about $10 a stud. So as you can imagine, again, the actual cost to do a job, even before the labor itself, just the materials cost for a lot of jobs has become much more expensive. And that's just the inflation on the materials as well as the goods. So you think about supply chain issues. The lumber shortages are related not just to supply chain, but also with climate change. Weather patterns are becoming more severe. Of course, lumber is with trees, and it's a produce, it's a crop. And so that is causing fewer trees to be able to be harvested for lumber. And so again, causing supply chain shortages. All these things constrain the supply. Our supply is constrained on the labor side, on the construction side, We have COVID-19 pandemic that is increasing demand. And then we're going to start getting some mortgage defaults here that is going to hopefully ease the market a little bit, but probably not to a significant amount. So all this kind of culminates to a really big shift in how the market is going to be. And really what this means is this increased supply, these constraints mean that even if we have somewhat of an increased supply, it really won't bring prices down anytime soon. And it really also explains why prices have risen so rapidly in the past year. I'm here again speaking from the Columbus, Ohio market, and our home prices have increased 30-40% over the past 12 to 18 months. It has been absolutely bonkers from a market perspective, and it really shows no sign of slowing down. So in short, what that means is that owning property is going to become even more valuable and less accessible to the average person. So that's why this could quite possibly be one of the last windows of opportunity for people to quote unquote get in to real estate. So if people aren't really keeping their eyes and ears open, inflation is going to keep increasing and prices are going to keep increasing versus demand is still there. So this really is a rare opportunity where if people aren't already in and already in an asset class where their income and their wealth can fluctuate with inflation, then really they're going to be facing some really big headwinds. Okay. So hopefully this is helpful so far. Let me know in the chat what you're thinking. Hopefully this is not too much from a data standpoint, but hopefully this is helpful. And Sela says she's looking for cash flow and short-term rentals in Tampa and St. Pete. Awesome. Awesome. Love St. Pete Beach. Shay says it's like, wow. We really try to deliver a lot of value. Yes, lots and lots of value. Wonderful. Wonderful. And again, if you have any questions at all, I'll be happy to answer those and just kind of dive deeper wherever it makes sense. So, one of the things that I did mention a little bit earlier here is that real estate is inherently tied to inflation, and it's an inherent hedge against inflation, especially when we focus on income producing real estate. So here's what I mean. From a rental standpoint, rent lets you know what the true market value is of a property. For example, if I have a house and let's say, just to use Sela's example, she wants to do short-term rentals in Tampa or St. Pete Beach. Great. So let's say that we want to rent one of these houses for $1,000 per month, just throwing it out there. If the market does not deem the property worthy at a value of $1,000 per month, then she will have a very difficult time renting out that property, right? So that means that she's overpriced or that people don't see the value in it. However, if you have many more applicants, if the property gets, let's say, 10 applicants in the first day and another 20 by day 2, then you may be underpriced, meaning that there's much more demand than supply. Okay, so that will be a good thing. So the beautiful part about rental real estate is that it is very real. It's a real-time indicator of what the value of the property is. Now, when you're buying and selling, that is a lagging indicator. So just because someone says, oh, I like my house with these granite countertops and I want, X number of dollars for it, that is really only worth what someone else is really willing to pay for it. So if you say I want 300,000 and you can only get offers for 250, then that might mean that the actual value is only 250 in that interim. But if there's another headwind in the market that can cause appraisals to change, then that means that then they can essentially change the market conditions, because it's a lagging indicator. It takes about 90 days or so for a property to close. So the reason why owning rental property in an inflationary environment is so powerful is because if inflation increases, then you can increase your rents, i.e. your income, in lockstep with inflation. And that is really, really powerful. And it's one of the few asset classes that really allows you to do that. Okay. And so the thing about it is the buy and sell price, that's tied to how valuable the currency is, but the rental rate, that shows what the true market value is for the property. So that's why if you don't already have real estate exposure, this is something that you may want to consider in this economic environment. Okay. So you might be thinking, okay, I'm kind of following here, but like, what do I do? And really, what does inflation mean? So I like to use this example. So I'm a millennial. I'm in my mid 30s now. And when I was in high school, I was able to fill up my car with a tank of gas. I like to say from E to F, from empty to full, for $20 flat. It was a standard little coupe, like little sedan. And $20 bill was more than enough to give me a full tank of gas. Fast forward to today, a few years later, if I want to get a full tank of gas for an equivalent size vehicle, it's going to cost about $35 to $40. And that is inflation in real time, meaning I can have that same $20 bill, but back when I was in high school in the mid 2000s, early 2000s, I could purchase a full tank of gas for that $20 bill. Today, that $20 bill will only get me 3/4 of a tank of gas or half of a tank of gas. So even though I have the same dollar amount, my buying power is reduced. And that is what inflation does. It erodes away of your buying power. So really the conversation that we're having today is, how do you properly prepare for this wave that's coming? And the way that you prepare for it is by really, really changing your brain and saying, hey, how can I take my lump sums of cash and turn them into cash flows? Okay. So this is really, as the economic environment changes, we're fighting inflation, and that is a game of buying power. Okay. And so to properly prepare, it's all about the velocity of money and how much of an income stream you can generate from the assets that you have, the liquid assets that you have on hand. So again, so looking at income streams and the way that you can produce income, it's really that rent does adjust with inflation. However, other goods and services that you may offer, let's say you're in e-commerce or something like that, it may be more difficult to adjust in lockstep. Someone may not want to pay, double for their new candle, but, from a necessity like housing or gas or something, whether I want to or not, those prices are increasing. And so it really puts you in a strong income environment when you have an asset that is a need and something that people certainly need to have in order to keep going with their daily living. Okay. So, at this point, I've really laid it all out. We've talked about timing. We've talked about how, from a economic standpoint and a time of year standpoint, the time really is impeccable to purchase or increase your holdings in investment property. However, that window may be closing in a relatively short order. And one of the beautiful parts about real estate investing is it allows you to take your lump sums of money, and turn them into streams of income. And as long as you know what to do with it and how to implement it, it really doesn't matter exactly what type of property you're going after, as long as you really keep that mindset of, I'm going from lump sum to stream. So that can be short-term rentals, that can be long-term rentals, that can be multifamily, that can be single family, but it's really about the velocity and the turnover of the dollar. Okay. So again, real estate is an asset that you can use to obviously you can finance it because it is a hard asset. You can raise private capital if you need to grow your portfolio. It really gives you a lot of options there. And so I really think that right now is an impeccable opportunity. Buying season is upon us. We're just in the beginning of October now. And right now, I'm seeing people that are typically not willing to sell are really willing to liquidate assets. They're willing to say, you know what, I may want to reposition. And so if you are bullish on a long term and really need something to hedge in your portfolio and don't have enough exposure, I think this can be a really great opportunity. And people that aren't as financially secure, they can be a little bit scared right now. And it makes sense. So, we don't know when this pandemic is ending. Unfortunately, everyone doesn't have the ability to work remotely or work from home. And so those persons, they may be a little bit more hesitant than persons that have the ability to work in a remote setting or a hybrid environment. And, as these strains keep coming on, it's really about how can you position your financial affairs to be resilient regardless of whatever the future holds. So I'll pause there for just a moment before I hop into the next section. I want to talk a little bit more about the work we do here at Housing JV and how we can work with any investors that are looking for things. So let's say here. Yes, Tiffany says $20 fuel up, the good old days. Indeed. Those were the good old days. Awesome. Okay. And we got a couple more responses to the poll. So people are pretty much all over the board. Okay. So some folks are still in the research phase. Some are feeling a little financially hesitant. Folks are willing to jump in as well as grow. So pretty split there. All right. Awesome. So if you have any specific questions that you'd like me to answer or dive deeper into, go ahead and let me know. Put that in the Q&A. and I'll be happy to discuss that a little bit further. So if you don't mind, so we're about 40 minutes in. I'll take a few minutes to tell you a little bit more about some of the work we do here at Housing JV, and what we have to offer, to really help sharpen your skills and get ready for this year's buying season and beyond. And of course, don't forget at the end, I'm going to talk a little bit more about our favorite way to buy property in buying season that has the absolute most motivated sellers that cut to the chase and are really looking to do business and talk turkey with no middlemen or anything like that. So if that's of interest to you, then go ahead and stay tuned. So, I think one of the biggest takeaways that I would take from this conversation tonight is that, real estate investing is very simple to understand. From a market timing and economic standpoint, I think the timing is particularly unique, but it's not always so easy to implement. And it can be a little bit harrowing if you don't have a very strong plan or strategy to know what to do first, what to do next, so forth and so on. Okay. And this really is shown the best by looking at the data and looking at the numbers. So if there's anything that you've hopefully gathered from this conversation, is that we like numbers around these parts. And it certainly helps illustrate a lot of the more macro trends that we're seeing going on in the market. Now, again, when it comes to real estate, everybody knows someone who used to be in real estate or has dabbled in real estate. And, we hear about all these stories, but it's really about who are the people that are currently doing the business and actively working the system, essentially. So looking at IRS data, that lets us know who of income tax filers, people that file a 1040, who declares rental income on their 1040. Only 7% of Americans that file a 1040 declare any rental income at all. That means 93% of Americans don't invest in income producing real estate, period. Only 7%. So if you're even going down this path in any capacity, you're already elite and part of a very small community of persons that are really thinking countercultural and saying, hey, what can I do differently to really position myself and my family and my future generations for a financial future that isn't the status quo. So kudos to you for even being in this realm, which is amazing. Right? Now, taking that 7%, the next level is 7% of that 7% are people who own property valued at over $1 million a year. So of that 7%, only 7% of those landlords have essentially more than one property, right? So in general, income property is less expensive, as in each per door costs less than a property that you would live in as your personal residence. So a landlord with $1 million portfolio typically is going to be one who owns more than one rental property. The majority of landlords only own their own personal home and one rental house. So out of all landlords, only 7% of folks have managed to grow $1 million real estate portfolio, which is rare. So ultimately, we're talking about 0.05%. So this is a 20th of a percent of the population that owns income producing property valued at over $1 million. Right, Cynthia. We're talking. We are to say we are the niche upon the niche is amazing, and it is really surprising that everyone cognitively knows that real estate investing is something that has stable returns, generally speaking, is historically proven, but very few people actually take action. And I think that's where the rubber hits the road, is that the actual taking action and following a path, that's what really separates people that are successful from those who talk about it, think about it, but don't actually take any action at all, right? And so the question is, what is it about this 0.05%, these folks that have income producing property that is $1 million portfolio? Was it that they do differently that the rest of the population doesn't, right? And there are a couple of unanimous truths about these successful real estate investors. And by and large, we all follow a proven path. To be honest, it's actually quite boring. There is no reinventing the wheel because, to be honest, good investing, like Warren Buffett often mentions, you invest in things that you know, and you want it to be boring. You want it to be monotonous. You want to take all the emotion out of it. Personally, I have a background in science, and I like to have a rubric that I can use to filter to make my decisions based on. What that means is I'm not hunting and jumping from idea to idea. Instead, it's more of this is a rubric. It either meets this criteria, it meets our criteria, or it does not. And that puts you in a very, very powerful position. And the reason why people struggle when it comes to real estate investing is because actually it's 7 different business models all wrapped up into one. So you have to build a team. You have to at least have some sort of prowess when it comes to construction. Even if you're not doing ground up, you need to at least know some sort of construction for repairs and maintenance and things like that. There's certainly a finance aspect. There's strategy, which we're talking about, acquisitions, which is all about buying seasons we're talking about now. And then ultimately, how do you scale up at the end? How do you actually take what you're doing from the mom and pop stage to this actual scale of having $1 million portfolio and or beyond, right? And again, it's really about saying, how can I have a rubric to filter and make decisions on? Okay. And how can you implement that in your own individual portfolio? All right. And again, the secrets to success, they're actually very, very simple. But like most things, simple isn't always easy to put in place. And so again, as we talked about, there are 7 different business models or 7 different actions in a successful real estate investment portfolio, real estate investment business, because it is both an investment as well as a business. So let's just kind of run through them very quickly here. So from a strategy standpoint, you have to be very crystal clear on what your investing goals are, as well as those desired outcomes, right? So it's not about just hopping from idea to idea or saying, hey, I think this is good and I'm just going to run with it. It's about being very diligent from the beginning so you can say, yes, I know that this is going to give me a certain return on a certain time horizon, and this is what I can expect when I deploy my capital. Then we talk about acquisitions. How can you have very strict buying criteria down to the property and location level, down to the zip code level? So again, there are no surprises, and you now become your own competition because you know essentially this part of the world like the back of your hand. All right. Next up, we have finance. So when you have your predetermined financing options, so that can be your time horizon, what ROI you would like before you execute a transaction, then you can say, hey, either this meets my criteria or it does not. And there's no hard feelings. You can either say, yes, this meets my criteria or it doesn't, as opposed to trying to say, oh, I think I can make it work, even though these returns may not be what I ultimately wanted from the beginning. From a construction standpoint, of course, you want to have itemized budgets, standardized materials, consistent designs. Again, we're not trying to HGTV and start over from scratch every single time. It's how can I bring consistency and repeatability for scale? When you're building a team, you want to continually cultivate those relationships with vendors. And the key there is to have vendors that work in your preferred style. All right, just 2 more. Next up, we have property management, which is again about having consistent screening, enforcement, and providing quality customer service. These people are paying for customer service. And I think that's where a lot of the discrepancy happens between tenant and landlord is the tenant feels I'm paying a lot of money and I I would like to have quality customer service in return. And I think some land property owners don't necessarily respect, in my opinion, the money that is being paid to them, and don't give the customer service that they should receive. And then finally, when it comes to scale, how can you have a well thought out business plan and growth targets, as well as time horizons and risk awarenesses? So all of these together, this really is about having a comprehensive strategy to implement over time. So as we're talking about this, we really have covered how real estate investing can put you on the financial fast track. It really, from a economic standpoint, from an inflation hedge standpoint, from all these different angles, there really is a renewed case and a renewed vigor for why real estate investing makes sense, particularly in today's economic environment. But it goes without saying that also being data driven and clear with your strategy, that's really how the most successful investors is how they succeed. Okay. And so with that, it's really about, you got 93% of the population that isn't even a real estate investor at all. They're not even in the game. And then of the people that are actually playing the game, we're talking about 0.05% of the American population are $1 million landlords. These are people that have actually figured it out and figured out how to scale a portfolio of income producing properties so that they can have repeatability, scale, and growth. Okay. And so if that's something that is interesting to you, then I would invite you to explore the Housing JV Real Estate Investing Bootcamp. And in this bootcamp, we help investors really hone their investing prowess and really nail down their business plan, their business model, and implement it over a 12-week period to become a data-driven real estate investor. Okay. And I'll mention, this really is not for everybody. This is much more of a bespoke experience because it offers step-by-step guidance, accountability, and community for prudent investors. So this is not your standard real estate investing class that you just sign up for and kind of do it on your own. That's not how we like to service our clients. This is much more individualized attention, one-on-one support, individualized feedback, and a partnership. Our name is Housing Joint Venture. And so even if we are not partnering on a property specifically, we're partnering in your growth and your ultimate success. And so with that, we really like to have more of a hand-holding approach where we are partnering with you as you grow your portfolio and take whatever vision it is you have for your investment firm and take it into a reality. Okay. So just to give you a bit of a sneak peek about the course syllabus, there are 8 modules. And in the beginning, we talk a lot about foundations. Then we get into your overall strategy and really honing in on what your mission, vision, and goals are and nailing down what those metrics for investing are. In the third module, we talk about financing and developing your key performance indicators. So just like in corporate America, they have these key metrics they want to hit before they deploy any capital, before they deploy any cash. The same thing is the same level of diligence you should have in your own portfolio. In the fourth module, we talk about acquisitions. In the fifth, we talk about building your team and identifying vendors properly. Then we go forward for the last few weeks about construction, property management, and then growing your portfolio to the next level. All right. And so it's really about, what do you think that sort of investment and guidance is worth? I have this picture of a healthy food because it's really about, hey, I can choose to have fast food or I can choose to have healthy salads and really invest in my health for longevity and overall well-being. Or I can try to go for a faster solution that, it may or may not work, but, I'm happy in the interim. And so, when you compare what this type of offering is against what else is out there, it's really, I think, a very much, we try to provide a very value-added service. So high-end masterminds where you get together with a group of persons in person about 4 times a year, those cost about $100,000. If you were to engage one of the national gurus, their programming tends to be about $25,000 to $40,000. And of course, you always have the DIY route with books and podcasts and YouTube videos and trial and error. But we certainly believe that time is your most valuable resource because it is not renewable, however money is. And so with working with Housing JV, again, this is 8 weeks of content, 12 weeks of one-on-one support. We charge less than 1 year's gross rent. And we do have payment plans available. And so it just really depends on what package you choose. And so I would invite you to go ahead and sign up to book a call with us, and we can chat more about your individual situation and give you a little bit more information. But just to give you the full summary, working in the bootcamp intensive, it is 12 weeks of live one-on-one coaching that is performed in a group setting, as well as personalized feedback on your individual business plan. That we give you templates, we give you shortcuts, cheat sheets, everything you need to know. So it really gets you from I have the idea to I am crystal clear on how I'm going to grow and scale my investment firm. You do have lifetime access to all of the recorded content that is over 17 hours, as well as we do have private forums specifically just for the bootcamp participants and alumni. Again, the content is curated out over 8 weeks of content. You do have weekly action items and homework assignments that you bring back to the group, and it's really an iron sharpens iron. And, if you don't have a community of high-level investors that you can share ideas with and really cultivate and grow in this area, then I think the network and community of other like-minded professionals, I think that is certainly one of the highest benefits over and above even the content itself. So if that's interesting to you, feel free to book a call. Calls are complimentary. And if anyone who is on this webinar does enroll, then we are offering a complimentary one-on-one 45-minute fast start call upon sign up. So in addition to everything that you see on the screen, if anyone from this webinar goes ahead and books a call and decides to enroll, then you'll get a fast start, individualized one-on-one sign up. So again, you can book a call using the link in the chat, or you can go to housingjv.com/calendar. All right. So with that, I'm going to go ahead, and the last thing that we mentioned that we're going to chat about is, where do we find these motivated sellers, and where is the most in your face obvious place that is under your nose that you are not thinking about to find motivated sellers? Well, ladies and gentlemen, it is Craigslist. Craigslist, particularly in buying season, is the number one place to find motivated sellers of investment real estate. It is fast, it is cheap, it is to the point. There are no middlemen. Now, of course, there's a lot of back and forth and negotiation and a lot of other nuances in order to make it work. But in terms of the marketplace and where do you find motivated sellers to get the best deals, Craigslist by far is the place. And of course, that is a training that we do offer as a part of the boot camp for some of our students that want to go kind of downstream and source deals from Craigslist. But we have purchased lots of properties and lots of deals from Craigslist, and it is still as viable in 2021 as it has ever been. So with that, I see a couple of questions coming in the chat, so I'm going to go ahead and answer those. And hopefully you found this presentation helpful. I really appreciate your attention and your engagement this evening. And again, if you have any questions at all, feel free to put them in the chat. I'll be happy to answer them. And I really hope that this has changed your perspective about buying season, real estate investing, and really the current economic environment and where there's opportunity that we certainly see. So let's see here. So Tiffany says she has a client interested in investing in Section 8 housing. Do you have any experience acquiring project-based vouchers? So I'm going to ask you to clarify, Tiffany, are you saying like a large multifamily project where the entire project has basically vouchers, or are you talking about the individual one itself? So typically, if you're going for larger projects, that's going to be a much I would say that's not for a beginner investor, because they're going to want you to show not only your track record of just of being a landlord and being an investor, but also your ability to have these, they call them HAP vouchers. And at that point, to be honest, you are getting beyond just real estate. You're into real estate and politics, community initiatives, and there's a lot into getting approved from a large site multifamily scale for those. And we can certainly have a larger conversation about that. But yes, to answer your question, yes, we have owned properties that have those large HAP vouchers. Not something that we tend to like that much. But yes, it is something that we do have experience working with, and obviously certainly on the individual resident side as well. Oops. All right, cool. Mark that as answered. Let's see what else we have here. Yes, Chris is right. Depending on where you are, there are people, consultants that can help you with that. Mm-hmm. Let's see here. Certainly. All right. Cynthia booked her call. Fantastic. Shay says, thanks for the info. It was really good. Oh, wonderful. So glad to hear that. Excellent. Excellent. Well, again, guys, I really appreciate your time this evening. Again, if you're interested in learning more about working with Housing Joint Venture, again, we are offering an additional 45-minute one-on-one fast start call to anyone that chooses to enroll in the boot camp. You also get lifetime access to all the recorded content that covers all the different 8 modules that we've already discussed with those curated lessons. And the whole idea, again, is to take you from interested to investor. We have had previous bootcamp alumni who started the program in January, and by May, they already had owned their first investment property. We have persons that already had a portfolio of 4, they were able to scale. We have persons that were involved in syndications that are now going to start their own investment direct into properties. We have people that have invested directly on their own as landlords, people that have invested in larger syndicates and now want to start their own investment funds. So really the level and caliber of person who participates in the bootcamp is unparalleled. But again, this is not for everyone. This is for the prudent investor who really is trying to enter into a network and caliber of person where they're not trying to waste time. They're like, hey, I really want to move the needle, and I want to move the needle much more quickly at a greater clip than I can do on my own. And so if you are trying to invest directly into investment property, if you are trying to raise private money, if you're trying to do ground up development, if you're trying to do larger redevelopment projects, then this would certainly be something for you. Or if you're like, you know what, I want to get started the right way, and I don't want to waste any time, and I don't want to, like, I think it's a small investment to say, hey, I'm going to invest hundreds of thousands of dollars in this property. I think it's okay to put a fraction of that to make sure I protect the majority of my capital. And so that's really what this is about. Is this worth a little bit of insurance to make sure that when you really deploy your capital, that this is protected and grows as strongly as possible. So with that, thank you, everyone. Again, thank you so much. And yes, the calendar link, all you need to do is click the link on the button that goes straight to my calendar. And so we'll be having that call. So Shay, feel free to just book a call, and that goes straight to my calendar. And that's how we can do it. And again, it's housingjv.com/calendar. Thank you so much, Tiffany. I'm so glad you enjoyed the presentation. I hope it was helpful. And again, this is an unprecedented opportunity. I think the combination of buying season, the economic environment, COVID-19, regardless, I think everyone is really set up well to profit and really do good, because people need good quality housing, and people need good quality housing providers. And if you're of that ethos, then I think that this is going to be a great opportunity to grow and scale, as really provide housing to folks that may not have the means to do it themselves. But there's certainly going to be a need for people that can provide quality housing at a budget-friendly price. And if that is something you're interested in doing, then this is certainly a great time to do so. So with that, thank you so much, everyone. A recording will be sent out to you automatically if you want to have a listen to this again, and look forward to next month's masterclass. Again, we host these masterclasses every month. It tends to be towards the beginning of the month. So just check your email for notification or invitation about that. And perfect. And Shay, yes, the recording will be automatically sent. So after I end the call this evening, after about 30 minutes or so, you'll get an automatic email with the recording. So again, thank you so much, everyone. Thanks for joining. Have a great night.